and welcome to ATFX's oil review. As usual, thanks again for joining us, and please do subscribe to our channel, and we'll keep you updated with everything that's relevant and moving in global financial markets. And so we've got a bit of a big focus on oil this week. There's a big OPEC Plus meeting in the next couple of days, and we've seen some sharp moves on geopolitical risks over the last few weeks and months. And even last night, we saw a 2.5% increase as the conflict in the Middle East took another step to the side, and markets sort of rallied fairly strongly. So looking at a few of the different factors that move oil, we're going to look at the supply side, we're going to look at the demand side, and some of the geopolitical factors that are influencing markets. And of course, we can't leave anything out without the pending arrival of President-elect Donald Trump and how that's going to affect markets. I think one of the main things we've got to look at the moment is demand. And demand has been decreasing in line with global growth expectations. And a big part of that, and if you're looking at oil closely, you'll see China headlines all the time. China, as we know, the market has pulled back quite strongly. They were nearly 50% of the world's oil demand not too long ago. And in line with China's sort of economy receding slightly, we've seen that pullback, and that's obviously led to a decrease in prices. Obviously, something that we're then looking at on the China issue is what happens when the new US government comes in. If tariffs come through as well, this is going to take another big hit to the Chinese economy, and how that's going to impact oil. You would expect that to influence demand. Demand won't be as high. We could see a retraction in prices. This also touches in with overall global growth. So not on top of China, you've got other oil importing countries. That's also going to pull back on that demand factor. And one of those things is the influence that's coming through this week in particular is when we have that OPEC Plus meeting, is we are expecting that they will cut down on those supply cuts that were anticipated, as they're looking forward to seeing what's moving through. So demand really is about global growth, really is about where things are going at the moment. And we've then got to switch very quickly over to supply, because supply has been the main factor that's been driving markets, and mainly due to geopolitical risks. So two main geopolitical risks that are moving oil at the moment and many other markets is the conflict that we've got in the Middle East that's sprung up, over the last year between Israel, Hezbollah, Hamas, and then the states and countries around Israel. At the moment, Lebanon's a big focus, but obviously you've got Syria, you've got Iran. All of these things are ongoing. We saw some really good moves when the ceasefire was announced, and that could have pulled back on those supply concerns that we've seen, and we got a dip in oil. Overnight, we've seen Israel come out and announce that if ceasefires do pull back, they will return to strikes on Lebanon itself. That's obviously seen as a negative for overall supply concerns, and oil rallied 2.5%, 2.5% on Brent and 2.7% on WTI. The other big geopolitical influence we've got, and let's be honest, these are wars we're talking about, Ukraine and Russia. That's ongoing. There has been recent escalation. It has sort of dicked out the news so far in the last couple of weeks. But obviously, when Ukraine took the initiative and started to attack across the border into Russia, that also affected oil, because you're looking at an escalation. Maybe Russia escalates, will hit supply issues. And oil targets are obviously a massive target for some of these countries and these military strikes. We've heard it from Israel, we've heard it from Ukraine, we've heard it from Russia. And the other thing on the supply side is just the weekly number that we get out that does move markets a lot is the US inventories. The US has obviously become a major supplier of oil over the last few years, with that shale industry. And that has been flying up and down. But if you notice, there does seem to be a little bit more supply coming through to those US inventory numbers over the last couple of months. So I'll just bring up one of our charts now to have a little look. It's the WTI, West Texas Intermediate chart, one of the most highly traded future oil contracts in the world. This is a longer term view on what we've had. As I said, we're up at 127 something or other, and it has come steadily down over the last couple of years. It has been nicely range trading, and I threw this horizontal line in as well, because if you see here, it's around about 63.80. It's hit off this level a few times, and this is a much longer term chart. So back here, there's a nice little low just before we run up to those highs. 1, 2, kind of a 3 down here. We didn't quite get there, but certainly based out not too far away. And this, once again, it's a longer term chart with a few dollars around. But if we do, and I'll bring this chart in soon, if we do see a break of the recent support, this will provide the next very strong support lines around $64, 63.80, as I said. I'll now bring this chart into what we're looking at for this week's trading and probably the next couple of months. Here's that move that we saw, and it's a relatively sharp move, even on this daily chart, as you can see, 2.7% up. We have got a nice trend line support here. It does come in around about 67.70. Resistance is also quite key at the moment. You see it's up here around 76.20. It also coincides with the 200-day moving average. That gives us a double whammy for trading. So if for whatever reason, supply concerns, geopolitical risks do tend to increase, this is a big target. It's got a big target, and I probably shouldn't be using that terminology while we're talking about wars, etc. But that's a big target for traders. If massive geopolitical risk and supply concerns continue to come through, this will be the target, and a breakthrough then takes us up to moving up to these highs that we saw around 84.50 not long ago. Things start to calm down a bit. Supply looks to be over and exceeding demand, and we will see prices move down. And that has been what's moved us down to these levels. Next sort of support is down here around about these levels, just underneath $68 a barrel. A breakthrough there would take us down to that 63.80, and then it could be on for another move back down to like $50, which will be the next psychological level. So plenty to play for in the oil game. We are seeing, and if you've been paying close attention to financial markets, it has been trading in what looks like a relatively tight range on the dailies. But as I said, if I bring this in, these are sharp moves. We're seeing $66 up to 78, back down again, and this is only in the last few months. So on a daily basis, you're getting more bang for your buck in the oil. We're seeing big percentages, 2%, 3%, whereas in currencies, we're seeing, 0.5% move in the euro. We saw 1% move in the euro the other day. It was very, very big. But you can get more bang for your buck. You probably want to bring your trade size down, trade your technicals very well. But certainly in the next few days, next few weeks, oil is going to be one of the ones that a lot of the markets are looking at, and it's going to be moving. So once again, as usual, if you need anything more from us at ATFX, please let us know. Hope you enjoyed the video. Please subscribe, and thanks very much.